The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, noon till 1 p.m. Eastern Time. 877-927-6648 is the number to call. Fascinating market. On a purely technical basis, if you looked at the daily chart here, I've got the E-mini up 20 points, almost 20 points, still under the 2594.50 all-time high. That was a peak D in the Chapman wave. And it pulls back to yesterday's low of 2555.50. Purely technically, on a daily basis, this chart is very negative. It's these emotional spikes, it's these news-related spikes that are quite fascinating that keeps pushing it either to or just above the 9-period moving average. And if you had to add up all the points on the downside, since the high that was made right here, this is in the E-mini, it was on the 9th of November, you would get a lot of points to the downside. But with the, well, I believe the president is speaking to the Republicans very shortly. I think it's somewhere around 1:30. There's going to, maybe it's 1:30 that there's a vote on the tax situation. We'll see. Will we today or by tomorrow smash through the 2594.50 high and start a new move to the upside? Are we really setting in place a consolidation, a sideways consolidation that says, regardless of what happens over the period of the coming weeks going in towards late December, there's going to be enough turmoil and fighting with the taxes, especially that you've got Senator from New York talking about the tax hitting his district very hard, same as it would here in Massachusetts with the real estate issues involved. This is the taxes, the interest, etc. We'll see. So a worst case is that there's an outright rejection today, and then there's a real hassle going on because the Democrats are going to try to forestall anything that the Republicans do. Republicans are going to try to, one way or the other, try to get something through. They haven't got anything through. This is really important. So are we looking at a high-level consolidation? This is what I'm going to be discussing in my webinar coming up Monday night. It's free to subscribers. You can be a subscriber. It'll be archived. You'll be able to look at the webinar for 30 days. You will get my newsletter for the next 30 days. So this is going to be a very interesting time. And talking about interesting time, I'm going to be talking about what we're looking at in the interest rates, what we're looking at in the different sectors. So how this unfolds between now and Monday is going to be really important. It's going to give us a tremendous amount of clues and a number of different aspects that we can look at. And we're looking at the Dow right now up. The Walmart is higher, Cisco is higher, Caterpillar is higher. Well, it's green all over, but it's really interesting because we've got a kind of a broad relationship to what's moving higher here and the few sectors that are not really moving higher. So let's go to the numbers. The S&P, as we're speaking now, is up 20 at 25,845.75 is the E-minis. I wanted to show this because this is now leg C in the 120-minute chart, and it's tackling the 2582.25 high that was made at a peak D back on the 14th before the tumble down to 255. So we're slightly higher. So far, that's very positive. Let's go on. Now we're going to get rid of the 120-minute bar chart, and let's run the numbers. The Dow is now up 190. Under the 23,602 all-time high, but not that much, 143 points to make a new high. But what's really important here is that we're looking at the MACD still barely acknowledging that there's a rally today. The stochastic has turned up. On balance, the volume is holding pretty well. So this is very interesting. Why? Because what I've said is the weekly chart, the monthly charts are looking very good. We'll see what happens here with the Dow over the period. There's a very strong channel line resistance today at 23,490s. Another 40 points. Anything can happen. Okay. Let's go on. So, and the support is any failure going back under 23,390 would be very negative. The S&P, as we're looking at it, the S&P cash is up 20.69 at 2585.32. All-time highs at 2597.02. And we're looking at the potential here for a Chapman wave. There it is, falling axe breakout formation. So we'll keep that in mind. Actually, more like a parallel resistance line. Even more important about this is that here again, the MACD is just kind of flattening out a little bit. Stochastic hasn't turned around here at all. On balance, volume is rather weak. This is an emotional spike to the upside. Emotional schmotional. The price is the arbiter of the trend. If there is a new high above 2597.02, it has to be respected as really strong action corresponding once again to the weekly chart being very strong. Let's go to the QQQ. QQQ has been the strongest. It now 154.54 was the high, all-time high on the 8th of November. We have just hit 154.56. This is a breakout. So this is not a G. This has to be considered. This has to be considered EF. Oh, that should have been an F. Sorry. Just as well I checked that out. That was an F. And now what we're looking at is an F/B. And this could be a G/C. So this is very positive on the NASDAQ. And I've been saying that the NASDAQ is the strongest indice. And it proved that today. What we're looking at is that the weekly chart is now extended. And the monthly chart is still in leg C. Now let's go to the IWM, which was the lagging indicator. Nice big spike is at 147.67. Really, for the IWM to say that I've turned the corner, I'm on my way higher, it has to break above this very ugly candle of the, is that the 5th? The 7th. On the 7th, 148.85. So it has about another 1.25 to go. If it goes above that, you have to consider this is really an outstanding market that we could, in fact, having survived September, October of this year, there were no major turndowns. Usually markets that survive and do well in October go through November and December, closing near the highs near the highs of the year. So let's go on, and we're going to go to look at gold. And now this is going to be very interesting because gold is up $2.20. I'm not sure quite what it is other than that it's holding support to the 200-period exponential moving average. For our subscribers, we're out of one of our Dow short sides, and we're out of the SMH completely. So that was on the short side. It hasn't made a new high. If I had used the SMH instead of the alternative index, short index, we could still be in it because we got it within cents. Exact all-time high. Hey, that's not happening. So gold is up, and the dollar, which was up a little bit before, is now holding. It's up 2 cents. So we'll talk about gold, silver, and the dollar when I get back. Plus crude oil and bonds. Be right back. Basil Chapman, Tiger Technicians Hour. Dow's up 191.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Basil Chapman has just announced a special subscriber event taking place Monday, November 20th from 5 till 6:30 p.m. Eastern Time. What can you anticipate for 2018? In this 90-minute webinar for subscribers to Basil's daily trading newsletter, The Opening Call, he will be discussing a variety of topics for the coming year, including: can high techs continue to lead? Will the financials be affected by yields, and where will yields be in 2018? The chances for inflation or deflation? What stocks could be affected or weakened in the coming year, as well as Basil's long-term outlook for the dollar and gold, as well as many other topics. For all the details and to sign up for a 30-day free trial to The Opening Call, visit the front page of TFNN.com today. With nothing to risk, this is a great time to try out Basil's daily trading newsletter. Sign up today. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi everyone, Basil Chapman, Tiger Technicians Hour. Dow's up 192, S&P's up 20. We're looking at the dollar at 93.84. It's up 2 cents. The weekly chart is just sitting right on the 9-period exponential moving average. The MACD and stochastic are really poor in the daily. They're quite good in the weekly, quite good, I say. Not great, but quite good. And the 120-minute chart has gone to a D. So you're getting this kind of pullback that we should be expecting. But what's really important about this is that it is the coming 2 months that are going to be very important to discuss. That's what I'm going to do on Monday night in my webinar. I'm going to be discussing the outlook, the parameters to look at. If you look at the EUR, USD, dollar, the euro-dollar currency pair, made a very strong leg to the upside to leg B. It's pulled back quite a bit today. The weekly chart is just holding very nicely. The 200-period exponential moving average of 1.16. My contention was that even if there was a bounce, I was expecting that the euro would come back to retest the 116, maybe even the 101.15 level, 1.16 to the 1.15 level. We'll see about that because this little pullback here has not got the MACD. The MACD is good, but the stochastic has not gone above 80%. So I'm going to be watching this very closely. And if you put it together with the Japanese yen, this is the dollar-yen currency pair, it tried to rally, got repelled to the 9-period moving average. And that's suggesting that shorter term, the dollar is having some trouble here with the yen, because the two have been rallying in not similarly, but in directionally the same moves. I'm going to be watching this very closely over the next few days. So just to make it real clear, let me just do silver right now. Silver at this point is up 0.10 at 17.08. Now this is fascinating because it was a little confusing to me, but I did it purely on a technical basis. We did go long the gold miners yesterday, small position, but one of the reasons being that if there was going to be more of a pullback, even on a shorter term basis in the dollar, then gold is going to be a clue, because if gold, at this particular point, gold is really up to, it's not a big deal. But if gold made that leg D, and today is probably a peak D in the daily. The weekly chart is not very strong. What is a little bit impressive in terms of what I look at is that the MACD's been rallying, the histogram's positive, the stochastic was rallying, it kind of stalled at 60%. If there is a move in gold that takes it to the 1285 level between now and Monday, rather than pulling back and retesting the 1275 200 period exponential moving average, my thinking here is that the stochastic, the on-balance volume is very good, actually. The stochastic will start to rally towards the 67, 68% level, which would be good. I prefer to see 80%, but at least rallying would be good. So this is more short-term trades. What's really important here and what we need to be considering in terms of market potential is if I'll just do crude oil quickly so we get all that out the way. So crude oil pulling back a little bit down 27 cents, made a peak E in the daily, peak D if there's no new high this week in the weekly chart, and the monthly chart is improving. But what's really important about crude oil is it's held well. Holding well is fine, but I would much rather have it rallying to the 55.90s, 56.20s at this point, because as it stands, it looks like it wants to test the 54s. That's going to be critical. Could do that by Friday or Monday, and that's going to be one of the key ingredients we're looking at here for a number of reasons. Now, one of the things I want to look at this point is the TLT is holding well. It's down 45 cents, had a huge spike yesterday into the 126.50s. What was the high? 55? 126.67. And today it's at 126.12. Now, this is complete. This was going with my theory that on a purely technical level, the market should be pulling back. Not a major, I was saying just lower lows and lower highs with sudden spikes to the upside that fail. That's been my contention. To go with that, I'd say that I believe that a rally in bonds with yields coming down should be putting pressure on the financials. But yesterday we saw that the XLF actually had a pretty nice day. Today's stalling up 7 cents at 26.25. To me, this is saying that my thesis so far is still correct in terms of the yields coming down, putting pressure on the financials, because the yields going up allows the financials to spike to the upside. Isn't happening quite right here. But as I say, if I'm looking at the Dow, Walmart, Cisco, Caterpillar, Home Depot, Procter & Gamble, Dow, this is Dow, DuPont, they've amalgamated, Apple, IBM, Goldman Sachs, Triple M, Boeing. You're looking at a complete mix of sectors that are all running very strongly. So on the day, there's a broader market rally than usual. It isn't just a sudden spike. This is kind of broad, and that's the reason why every dip has been seen as a buying opportunity and has pushed the market higher. But it's really news related, and if that news turns out by the end of the day to be absolutely fantastic for the market, hey, is it possible to have another 200 points to the upside? I suppose it is. That'll be the equivalent of, not really, but remember when we weren't here, but Roosevelt, most of us weren't here. Roosevelt had the bank holiday, was it 1930 or 31, and had a 10-day hiatus. Banks of 7,000 banks had folded. So they closed all the banks, had a 10-day holiday, and then opened with the new bank regulations, the regulations that from the Clinton years started to be emulsified. They were just ripped apart. Now we've gotten back with Dodd-Frank. So this is very interesting because the whole concept of that banks opening, and then you had I think a 21%, 23% spike on a one-day basis. It was one of the biggest, it has and still is one of the biggest single gap ups that I can ever find on the Dow. And they just started a huge bull market. So I don't know, maybe today's the day. I'm thinking there's just going to be a lot of hassling, and there's a lot going on in the news media, so that the pressure is going to be on both parties, I think, to try to really whip this one up, because each one wants to win in their own way. So I think that the fighting is going to be quite quite heavy as we go along over the weeks, but today might be a day that's a celebration to at least get something passed. Hey, let's go to John in Philly. John, how are you?
Basil, I'm very good. How are you?
I'm well, thank you.
Basil, I just wanted to place a quick call and ask you to pull back up the December gold futures chart that you just had up to ask just a very specific Chapman wave question, please.
Absolutely, yes.
Specifically, I have been a Chapman wave student of yours, for 10 years now, actually probably more. My question, on that gold daily chart, it's been in a tight trading range for weeks now, and the Chapman wave count on the daily has gone to
10 seconds, 9 seconds, 8, 7, 7, 6, 5. John, we're going to have to come right back after the break. Hold your thought. I'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back in the 10-minute chart. The E-mini has just gone to a leg. D just had another push to the upside at 23,472. Could be a huge day today. We're going to go right back to John, waiting patiently. John, yes, finish your sentence.
Yes, two things on the on your charts on Tiger TV. First,
yes,
the daily, then the weekly. On that weekly, I notice the stochastics are very low. Maybe they're bottoming to turn up. And on that daily, tight range, and in that tight range, you've gone to a leg D already. Here's my question.
Question away.
This pattern that I've seen this labeling here on that daily with the leg D making no upside progress. I don't see that regularly. If in fact gold starts to rally and clears 1295, 1300, and you get some momentum, what does that signal to you, given that you've already gone to a leg D higher in the Chapman wave count? Does that signal anything special to you, I guess, is my question.
Okay, yeah, this is one of those charts where I believe it should be a fairly straightforward visual. As we stand, this is one of the quickest A to B to C to D in the dailies. You might recollect that my contention always is if you make a D under a previous major peak, it's not a good sign. You want to make that D above any previous peak, whether it's an all-time high or recovery high, doesn't matter. And this at 129 is way underneath the 130, the 1309 level that it made back in mid-October. So far, that's just saying this is a bounce. That's all it is, number one. Number two, having contained the and held the 12, let's call it 1265 level so well for so long is a good sign, but it's not a bullish sign because big deal. So it's just holding support. You want to see a bullish sign is when it's moving with higher lows and higher highs. That's number two. Number three is, this is the daily, within the context of the technicals, having gone to a D and still only being in the 60% area is also not showing strength. So actually the strength we're looking at right now, up 2.7, that I'm kind of impressed with, because I would have thought that gold would have pulled back, either pulled back or, let me say, I'm impressed that it's up, but I would have been much more impressed if with the market pushing so high, it was kind of an inflationary push, and we'd be looking at yields going higher, bonds going lower, and gold going higher. This is kind of what, in a sense, what the Fed is really wanting. So we haven't got that. So I'm going to make it real simple. If gold trades above 1295 at any point in the next week, I would say that that's a very bullish sign. And if it pulls back and it goes under 1270, that is not a bullish sign. It says that the consolidation has lasted quite a lot longer. We've already made the D in the weekly chart. That leg D in the monthly chart is still waiting, but it's going to be much harder to get if gold goes under 1260. So as I'm looking at it right now, I would not be surprised if in a week's time, if this time next week, we're looking at gold and it's actually been stuck in a trading range between 1285, 87 and holding 1273. Would not be surprising at all. What the parameters I'm looking at, that's really the issue. And if gold, as it's trading right now, 1280.5 up 2.80, is able to push high, and I would say quietly higher. I don't want people talking about gold. I want to see it push higher, break above 1285, and then push above 1290, get to 1292. And if it does that within the next 5 or 6 sessions, that's going to be very positive for gold. And the gold stocks, if it just hangs out here, my feeling is it's probably going to hang out. But if it just hangs out, that's just, it's just neutral. And negative is to go below 1270 and hold below 1270 for about 3 out of 5 sessions. Those are the parameters that I'm looking at. So I don't know how that fits into what your question, but those are the parameters that I think I'm going to be notating for subscribers in any case.
Yeah, thank you very much. My takeaway was that quick move up to a leg D and still being decisively under that 1308 high. That strikes a chord with me. So thanks very much, Basil. Appreciate your time.
My pleasure. Thank you for calling, John. Always very good questions. So, folks, let's just look at this. What are we really looking at here? We're looking at, oops, I went to the wrong chart. We're looking at, I had a bunch of questions, so I'll get to those questions as well. I had, not a question, but a statement from a subscriber. Said, when weekly and monthly charts look good, don't short the market, but look for an opportunity to buy. I absolutely concur with that, but I mentioned over and over to subscribers that the daily charts, and let me show you something else here. The daily charts, I can go around the world. Look, DEDOW, this is Germany. This is the Dow German stock index. So the price is completely different, but the pattern is exactly the same. It's trading down. It's up to day 3 at 432, probably closed because at this point. But look, this is a peak D in the daily, very ugly. The weekly chart is still pretty strong, but I don't know how to call that. I'm calling it an A for now. And the monthly chart is still good. So those dailies, see, without the news today, there's a really good chance that we would have got quite a bit of a pullback. And so it's the news relationship to the market that is very important. Let's go to Greg in Boston. Greg, how are you?
Well, I'm well. Basil, how are you?
I'm well, thank you.
Good. Hey, I'm calling about Maxwell Technologies, MXWL.
Okay. Do you have a position?
No, I do not. I just saw it today, and I was actually looking earlier about 5:05, but I have to see what that looks like later today and maybe in an hour.
Yeah, so let me just do this. MXWL is Maxwell Technologies. This is at $5.10, up 35 cents. Had a tremendous move from the 430s to the 520s in 1, 2, 3, 4 sessions. Pulls back quite sharply yesterday to the 9-period moving average. Bounces strongly today, and it's trading at 510. So this is a stock that I look at maybe once every year, and I say, oh, keep it in mind. But the reason I say the reason why I say keep it in mind is that it has a habit of having these big moves. And I remember a long time ago when Dave White brought it to our attention here at TFNN and people in the den, and then discussed it. And it had a spectacular move, went up to the 20-something area, and then it came back down to the 5s. And so it keeps going on and off my list. Now, one of the things about it in this particular pattern, the weekly charts had a fabulous move. Week has still got a day and a half to go. Mm-hmm. But it's the daily that's quite impressive. So this is what I'm thinking. Whoa, that was quick. We got to. Yeah. Can you hold on through the break? I'd like to just do a little notation. Okay, good. It's worth it because it's up 34 cents and it's got a nice daily chart pattern. So let's look at it in more detail. I'll be right back, folks. Basil Chapman, Tiger Conditions Hour. Dow's up 199.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento and John Jameson are teaming up for a live hour-long webinar Wednesday, November 15th at 5:30 p.m. Eastern Time, titled The Hidden Secrets Behind Trading and Investing in Cryptocurrencies. Cryptocurrencies are some of the most volatile trading markets in the world right now, and this is a webinar that you will not want to miss. In this live 60-minute webinar, John and Larry will discuss a variety of topics, including where cryptocurrencies trade and how to get started, how to recognize supply and demand in cryptocurrencies, and the difference between Bitcoin and Ethereum, and why knowing this one piece of information puts you in the top 1% of cryptocurrency traders, as well as many more topics. Visit the front page of TFNN.com for all the information and to sign up today for Fibonacci 24/7, and we'll see you Wednesday, November 15th for the hidden secrets behind trading and investing in cryptocurrencies. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, folks. We're on with Greg in Boston. So, Greg, we're looking at Maxwell, and I was just about to say, looking at Maxwell Parrish. I don't know if you know him as an artist from the 1930s. Fabulous illustrator. Anyway, so this is Maxwell Technologies, and one of the things that has, every time I look at it, I say, whoa, that monthly chart with the lowercase h that goes to a lowercase m, at some point it's going to give a really good buying opportunity. If you look at the EUR USD to look at chart formations, there was that lowercase h that went to a lowercase m, then it went to a lower low, and then it had that huge move up. So if Maxwell is going to do anything, I would say that between now and today, so today's a 70, so it's a month and a half. I'd say over the next 3 to 5 weeks, if it doesn't come back down and test 4.29, it could be in that pattern that says lowercase h to a lowercase m with a successful test could go very much higher. So this is what I'm going to say to you. If you're prepared at $5.09, it's real tough to say, you know what, a 50-cent stop would be 10%. Right. Now, I personally don't think I want a 50%, a 50-cent stop, but I would say to you, let's wait 2 days. If it breaks above peak A at 523 and starts leg B and then pulls back, I would say now I'm interested in saying start a small position. If it can't break above that by tomorrow or Monday, instead it comes back down under 5, I say let's wait, but let's keep it on a watch list, because I think it's going to start the basing process from the action it's just had. I don't know if it's news related, but price-wise is the...
Sorry, they had earnings. It was either the 10th or the...
Oh, okay. So the earnings...
the 12th,
So I just like the way it's responded to earnings, not even the earnings, just the response. So far, the response is quite good. Let's give it another 2-3 days. Today is Thursday. We won't do anything Friday. But Monday, I want to look at it again Monday. Now, a reason why Monday is because I want to see how it closes. Anything can happen today. We've got the vote coming up, at least a vote coming up. Then we want to see what happens tomorrow. If there's follow through, maybe tomorrow we take out all the highs in the market and all the different indices, and we're off to the races. Or there's a stalling formation as all of a sudden it looks like things are going to be tougher than people would like. And let's see how Maxwell actually acts in relation to the market, and then independently. If the market rallies and it can't, that's one thing. If the rally pulls back and this holds real steady like a rock, that's going to be a good sign. So I'm just saying, it's come down so sharply from the 6s down to the 4s. It's now in 5s. I don't think we're going to miss anything, because even if it goes a little higher, that's just saying to us there's buying pressure, and that's a better sign than if it starts to weaken. So hold off, keep it. I'm going to make a note here to look at it again. Maybe tomorrow, but definitely on Monday. So MXWL, I've got it written down. That's the one that I'm going to be looking at.
Okay.
Let's see what it does.
Thanks so much.
Thank you for calling, and good eye. I don't know how you saw that, but yeah, it had a nice move. Thanks for
Just
calling.
lucky.
Thank you. So, folks, let's do this. We've got a few moments here. I want to discuss why I wanted to have a webinar at this particular time. I realized that there was a vote that's going to be coming up. I didn't know when. These things can get changed, days get changed, whatever. Doesn't matter, because what I wanted to see is what's working and what's not, what's responding. And one of the areas we want to be looking at for the next big move up will be, how are the financials doing? Are they related now to the yields as I suspected they would be, but at least in the last 2 days they haven't been? Are we looking at, are they in play? Is a Goldman Sachs in play? These are things I want to talk about. These are things that we're going to be looking at. We're going to take positions in certain areas. We got stopped out for a nice profit in Bank of America. I was upset about it because intraday just suddenly turned around and had a fabulous session. I think part of that is because Buffett has Bank of America. It's one of the banks that has done almost everything right. So it's on my focus. We will get back in. I'm not sure just where and how, but I know that the plan is that Bank of America is one of those that I like in the financials. There are a number of stocks. We've still got the commodity index along. We've still got General Motors, which is doing very nicely today. So we've got positions. And the short positions, I thought I made it known, and most subscribers have responded to me saying, yes, we understand. We're looking at the dailies, and the monthlies are stronger. But this is going to be very important. Why? Because monthlies, look at this. Should I do that now? Let me see if I can find it. If I can find it. No, that's not the chart that I wanted. I'm going to find a chart right here. It's kind of tucked away. Maybe that's it. Yep, no, that's not it. That's the daily chart. This has got too much noise. I wanted to find a chart that I use. It's being hidden. I'm going to get it in a minute. It's just underneath. There it is. I'm pretty sure this is the one. Okay, here we go. Pretty sure that's not the one. I wanted to get this chart, and I'm determined to get it. Whoa. This one here. No. All right, I'm going to find it in the next break. What I wanted to show you is just a clean chart, just a couple of moving averages, and that's it, to show you what I'm really looking at, and I will find it in a moment. Let me just go here, window. I want the daily. I've got it right. I wonder if this is it. Nope, it's not. All right, I will find. I'm not going to waste time. And what I wanted to show you, just on a purely a visual basis, I wanted to go through. Oh, we've got Ben in Tallahassee. Ben, how are you?
Good, Basil. Hey, I'll make this real short because I'm real interested in hearing what you had to say on the naked chart.
Okay.
I know it's always good to look at the root of the ETF, but I'm actually looking at DUST, D-U-S-T, on the short side of the miners, and it looks to me like it's got a very strong stochastic on the weekly, and it looks like a pretty good chart formation, maybe even in a leg or peak B, I think.
So let's just do this, folks. We're looking at, Ben just brought up a very good point. This is direction daily gold. This is the inverse. What we're looking at is gone to an A, and then a B, and then a C in the Chapman wave, pulls back quite sharply. And in fact, holding above the 9-period exponential moving average, the MACD in the daily is not that good, and the stochastic in the daily is not that good. However, you're absolutely correct that DUST in the weekly chart is starting to show a lot of strength. However, what I like to do is to put the strength together with the actual price movement. And one of the things about these inverted ETFs and ETNs is that at some point you can get the price not going anywhere, but the MACD or the stochastic can have a huge move, but the price doesn't move. And that's a little concern to me. Look, you've had a massive move in the MACD. The stochastic's gone all the way from down below about, say, 8% to where it is now at 68%. And the price has not yet made a new recovery high. So in a sense, you're looking at it almost the same way as I'm looking at the gold chart. I'm not going to go to GDX just for the moment, but the gold chart. And if you're looking at the gold chart, the price is struggling in the weekly chart because the technicals of the weekly are, you know what? You're absolutely right. I'll try to get to it in the next 5 minutes, but tomorrow's Technical Friday. We'll do more on this. Let's do that tomorrow. Okay.
And so just folks, as important is that, go ahead.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, folks. I'm sorry, Ben, are you still there? Oh, I think Ben had to leave. So, Ben, we will go through that tomorrow in the technical Friday. Let me just do a couple of things here. So, a couple of questions. Vail, I had a question about Vail. Where is Vail? So I don't want to put it on the chart. I want to put it over there. V-A-L-E. Bouncing right now off the 200 period simple moving average. Yeah, you know, this is the same sort of thing as gold. Maybe it's the commodities. They're just trying to wake up here. It's trading at 995. Would I be buying it right now? You know what? If you are long, then I would put a stop in at 970. It's at 995, 970. I put a stop in at about 955. Let it test the low of yesterday. No, I don't want to see it even go that low. 965 is a stop that I would have in. Would I buy it right now? I need another day. I need to see that it's got follow through to the upside. And that's going to go for the other question about, say, FCX as well. FCX, no, it's not. FCX is not moving at all. So it's very selective. So I'd be doing nothing right now. Question, would I short Walmart, trading up in leg C, gap up? No. Why? Because Walmart's challenging Amazon in many ways. It cannot compete really, but it's challenging in many ways. So no, Walmart's looking good. Question about Bank of America. So Bank of America popped and then it stopped. So I'm really watching Bank of America real closely because it's on my favorite list and I'd like to get back in. But we've got 10% gain. Well, it's fine. So I try to get in. Okay. Now about the webinar coming up. The webinar. I had a question in the den. Basil, what do you make of the sexual harassment wave? Any relation to markets? This is the socioeconomic part of it. I'm going to be discussing. I'm going to be talking about sexual harassment. But the Victorian age is something I've spoken about for 3 years. I believe that this is all part of a very conservative phase that's going to be enveloping the socioeconomic aspect of markets, and in a sense, this is what we want to be looking at. The Da Vinci sale last night at 400 million. These are things we're going to be talking about because it's all part of what we're looking at the mega bull market that we are in right now. So, Basil Chapman, check the front page of TFNN, and be back later.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.